Good day, I'm Martin Gago with Market Radius Research. It's Monday, August the 15th, 2022. We've got CEO Sebastien Mailhot, CFO David Montpetit, and VP Biz Dev Steve Lee of D-Box Technologies joining us. D-Box creates haptic systems for theatrical venues, home entertainment, commercial training, and simulation markets. Glad to have D-Box back after another solid quarter. The company's core theatric business has bounced back strongly as lockdown restrictions have been lifted, and the company continues to diversify its revenue base by continuing its push into new verticals. Sebastien, David, and Steve will be walking us through the company's June Q1 fiscal 23 results, and then we'll be taking questions from the audience. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Gentlemen, thank you very much for joining us, and let's hear an overview on your fiscal Q1 results.
Thank you, Martin, for having us. As always, a pleasure, David, Steve, and I to be present. As we know, one of our objectives in the last 2 years and a half since we stepped in as executive was to engage more with the street and definitely a couple of times a year be able to do a business update. So we'll have probably a 10-minute to 12-minute presentation on some of the highlights, definitely focusing on the delivery, as well what is coming, and as well where are we excited. That's going to be probably a triangle you're going to be hearing us, and definitely keeping some time for the question. So Steve, moving to the next slide, please. So of course, next one's going to be you won't read that, as you know, a usual disclaimer. So quickly, so Martin, you mentioned that, so really happy with the quarter. So we talked about a long time ago when we decided to lead that company to profitable growth. So let's start about the growth aspect. So definitely doing goal. So razor in the blade. So as you know, we sell hardware, we sell system. So we're really happy with the level of increase we were having around that on the sales of system, which definitely theatrical, getting more into the upward trend, and as well our racing initiative. So really happy with this one. Secondly, we all know theatrical, our business model are recurring, so the rate of use has been tremendously up compared to Q1 last year. Important to say that this is the best quarter in terms of rate for use for D-Box in its history. The occupancy rate as well of our seat has been at record levels specifically. And thirdly, what is important as well, and we'll cover that, is that we're growing higher than the rate in terms of box office in that industry. So the revenue growth has been there, both sales of system and rate of use. Moving to the next slide, so that's the growth part. So the part that we were happy as well is to continue. Steve, can you maybe?
Great, Steve. Sebastien, just going back that slide, just to sort of state the obvious so there's no misunderstanding. Q1 2021 is the June quarter of year 2020, so the first sort of period of total global lockdown. So that's why they're surprising that there's any rights for use revenue there. That was the first sort of shutdown quarter, just to point
agreed,
out the
for the Q1 of last year, definitely. Next one, so definitely it's how we can generate gross margins, so operating profit. So definitely the percentage for us is important. A mix of a couple of things. Definitely the recurring business model, as you know, has higher margin with that. So definitely give us a boost during that quarter. And as well, even if you know there's been some price increase and some time acquisition of material that we need that have been affecting a bit the margin, as we're being able to sustain our gross margin around all our business segment. D-Box has made 2 price increases in the last 18 months as well to support as much as possible about protecting our gross margin for our profitability level.
When you talk about so you've increased some the pricing on the equipment sales. Does that translate also into the right of use side as well, or is it just on the hardware side?
It's mostly on the hardware side, as we're having multi-year contract that we have been saying around that.
All right.
Again, well, profitability, so 4 quarters of positive EBITDA, so really happy with those figures. Show where we can trend. Even in the past, D-Box needed to have 13 million of revenue to make positive EBITDA. So now we're able to make that with the quarter we're having. So really happy with the EBITDA level. As well, second quarter in a row that we're having positive net income. So only the third time in D-Box history. So as well as making EBITDA profitable, but as well net income, but it's a full profitability business model. So again, really happy with that, and we want to trend higher as well. Let's move to a couple of operating highlights. So we'll move. So let's start with our core commercial business. Again, record level with the tickets we're having. Doctor Strange, Top Gun, as well as Jurassic Park. Well, three of the big titles during that quarter. Remember that as well that we see the theatrical. If you will follow as well the Cineplex and things like that, there are strong box office arriving. Remember, there's a bit of seasonality in the recurring business model, as usually our Q1 fiscal or Q3 fiscal are the biggest one in terms because of the positioning of the movie. But really happy when we're looking at the movie that are arriving on that trail. There's Avatar and all those movies arriving that fall that should continue to provide strong operating results on the theatrical side. The third business that's what hit during the COVID was our commercial business as well, those theatrical venues, museum, etc. So happy to mention as well that there's people are picking up and launching new products such as LAI Game, which is one of our partners. So these are trending up as well, providing that people need to entertain being in theatrical venue or in commercial venue. So again, happy with that trend that we're having. Another part that is always important is to continue for our racing and gaming ecosystem to have more code. So with our partnership with the Electronic Arts, etc., we're continuing to roll out new games as they arrive for the love and benefit of racing and gaming fans.
Sebastian, could you go over the enabled LAI games launch virtual rabbits? Can you I'm not too aware of that.
Perfect. LAI Game is an integrator that we have in the commercial venues. So usually they sell to arcades, local-based entertainment. They created a couple of years ago some kind of roller coaster for family in VR that they position in arcade and local and small footprint area. This one has been one of the best selling machine ever in that industry, and they have made some improvement and update to that industry. So it's a 2-pod VR experience that is catered to all family. They have payback that start from 3 months to a year with that machine in various localization around the world. They have sold thousands of units.
And does that basically have the same revenue model as the theatrical one, where you sell the upfront hardware and every time they run a simulation, you get the razor blade, so to speak?
No, on those machines, usually what we have the sale of the hardware and we have content fee, but it's different from the theatrical business model. But they do pay us for content when they're putting new games or new events into it and the hardware.
Okay.
So business that we do believe will continue to grow in terms of rollout and to grow. Next slide, Steve. So gaming, and I'm moving this, Steve, directly to the next slide. So we'll do that. So gaming, really important. So we're impatient as you to have that seat available down there. And I'll say what I'm excited. So first, confirm with Cooler Master with all the delays that we had that nobody could manage. So that share is going to be out there for consumer in the calendar year, meaning as well it's going to be hitting our revenue during calendar 2022. I'm not referring to our fiscal year, but before the end of the year. Really important. For us, it was really important because definitely it's to put a first nice haptic experiences into the gaming industry to provide the leadership. So that is one. As well, what was important and what we're happy to work with Cooler Master is launching a game. People just talk about the actuators, but to provide a full gaming experiences was, of course, build the haptic experiences. That is one. Provide a design seat so people with cater and will love it. But as well, we work end-to-end with Cooler Master to develop haptic customizable experiences. So one of the things we're really happy is that we'll be able to engage those PC gamer, meaning they'll be able to customize the haptic experiences, create profile, and as well as share with them. So, and as well, there's always all the UX experiences that help people connect to the product on the unbox it, etc. So sending that gaming chair was not just about the haptic experiences, and that was the reason we're with Cooler Master. As well, it's important, and I know, again, we would love to have that chair before that, but they make a lot of survey to make sure they launch it right? They have influencer, they have beta tester, they have UX internally. So all those time as well was to put more time around that product. So finally, we should have that gaming chair hitting the stores and hitting availability this year with the revenue coming with that. The Razer, we're continuing to have that, though the horizon of Razer is more 2023 calendar. So this is definitely another one that we will have more news into the future. And last but not least, of course, we're having other partner in discussion to launch that chair. It's important as well to say that this is focused on PC because we think it's the best market and it will have 100% of the content available with haptic. And definitely this is an entry level point because we need to arrive with a product that people will see tremendous experiences, transforming a gaming chair to an entertainment chair, and definitely having some people that will engage to promote haptic while following with a lower cost solution when we want to democratize more and go to mass market. Last but not the least as well is that chair has potential in other segments. So an example, in the professional simulation, they are looking at that chair to create what you call desktop training. You move from the big simulator at 20 million at CE to $50,000 simulator to having haptic experience when you have they call desktop training, which they can have a lot of people. So we have big potential in other commercial as well to be able to generate some revenue from that. And yes, there will be that, again, razor in the blade approach, meaning we make margin and gross margin or the hardware and having a subscription business model on the content, a bit like we have in the theatrical market. So this is we stand, looking forward to have that. And of course, more peak from the launch date to arrive shortly.
Is there going to be any sort of tie-ins with any video games out there? Or I would think the more, like now that you've got it, when you have the chair out there, that'll give another impetus for video game makers. Like, yeah, let's embed the content in here to sort of target the high-end gamers and so forth. Are you seeing any synergies? Are you able to pull out any synergies with that?
Yeah, well, definitely. So first, to your point, that's why we started with PC gaming, because with our haptic customizable product, 100% of the game is going to be available from the first day. So that's why one of the reasons to go to PC. As well, you were saying, Martin, definitely with the way we're creating that, it's easier after that to connect with studio because, as you know, everyone is busy around the planet to have access to their time frame and engineering teams specifically. And yes, when we'll move to PC to a console where there's a different way to put in perspective, it's to attract more and more studio to work and put the haptic from the initial phase of their production.
So you're saying that every PC game will be sort of haptic enabled with your like engine in there. It'll sort of accommodate all of that.
Yeah, both on the motion and texture action. Yes, 100% of the game. So that's why going to be using all the haptic experiences, driving as well with the customization that you can do around PC to create the full experience. So yes, 100% of the game.
So is it going to be sort of like, because we can take a 10-year-old game, Call of Duty or whatever, and it'll add haptic sensations to that game. And is that using that kind of AI on the fly haptic encoding? And then newer games are more like Dolby encoded, where it's sort of the next level up on it. Is that kind of how it's going to work?
I'll answer that, but I'll have to kill you. No, just simply. So quickly, we're going to be using those. So definitely, we're going to be using the connection with the computer to be able to have access to the joystick or what you're doing with the joystick, the button, and things like that. That's what I learned. And yes, there's innovation as well around how we use audio at Retract specifically to create real time into those games. So it's a bit of everything, a bit of connecting to what is exacting, as well as how to create experiences. Let's you say on the fly based on what is happening on the screen. So a combination of both.
All right.
Next slide, Steve. So in the last quarter as well, we're seeing that the connection between the theatrical market moving to racing and as well convincing people to gaming as that connection. again, we're talking with those through market because we're crafting to the same persona, people that love entertainment, that love technology introduction, like love experiences. Particularly, we mentioned as well that we wanted to accelerate. There should be acceleration onto the racing, meaning working with bigger partner that is scale us faster. And definitely we need to drive revenue, so partnership that drives revenue. So I'll focus on two of the things that has been announced in the last quarter. One of them has been definitely to continue to work with big names. So, we signed with the FIA a year and a half ago, providing all that body specifically. eNASCAR to work from a marketing standpoint and with the esports. And at the Grand Prix de France, we were invited by Mercedes, so working closer from a strategy perspective with Mercedes. So we had a lot of simulation that were in Grand Prix de France. We were with them specifically, so it was a pre-launch of a product that I'll talk the platform, which people were able. You see the lineup like that. So we had more than 10,000 people that went there to try either racing simulator, but we had as well theatrical chair. And the good news for us definitely is, of course, these are people that's going to go into sim racing center. These are the people that can buy product at home and as well, they can go into their theatrical or buy other consumer product. So it's been fantastic. A lot of people having lineup during the evening, even if the race was finishing. And this is as well saying that we work more closely with a car manufacturer, which are the influencer of what's happening into a sim racing center, how they leverage their brand, car dealership, and etc. So that is one important step for us into that partnership with the Mercedes. Another one, you saw PR around a project that we had with Visaro and their partner. So we're talking about rollouts. So we have announced with Visaro a partnership that we're going to be rolling multiple over the next 5 years, multiple sim racing center, like arcade center, having lots of simulator, but that partnership is for roughly 2,000 racing simulators. So for D-Box, it's a multi-million-dollar contract over the next 5 years. So again, providing revenue into that model, having branded D-Box as well into those ones over there, and connecting to more consumer to create the demand at home. So this is one of many rollout that we want to do with them, but that's another one that has been announced recently. So again, car manufacturer, strategic, and as well commercial this. At the Grand Prix de France as well, we were using for the first time our new generation of actuator. I'm going to be talking later, but as well a product that we call the haptic platform that we showed in the previous quarter specifically. So it's like a pizza box, right? Where people can retrofit or put a sit or a simulator into it instead of having to engineering the actuator specifically. So we were with Mercedes and RC. So they used that platform that was there for the simulator. And that was there was a beta testing. So that product is going to be launched as well for commercial revenue before the end of the year. So we're really happy as well with that platform because, again, potential in the consumer market for people that want to do easy to install simulator at home. And as well, the platform can be used in commercial entertainment by using less retrofit from a commercial point of view to make the technical integration. So product will be arrived as well on the shelf for consumer and the commercial market.
With the Mercedes FIA, the French Grand Prix, you mentioned dealerships, that's obviously great promotion being at the French Grand Prix, but can you help us, where could it go with Mercedes? Having simulators at the dealerships, you mentioned that, or help paint a picture for how big of an opportunity this could be.
Perfect. So we started to work with FIA to create some pressure on the car manufacturer, and that's more. So that's phase one, number one. Phase number two, as you were saying, for a car manufacturer is, you can be looking, car brand are looking to connect to consumer right now, right? And to connect to future consumer, which are the kids. And so right now they do have their two attraction used to be like professional racing, right? Such as F1, or as well, you would be buying a car in dealership. So where they're making the connection and they know that racing is about, it's an emotional connection, right? People that are racing, it's the motor, it's the vibration, so you have to feel that. So the reason to work with car manufacturer is, I'll put you in their head, is car manufacturer are trying to create a customer journey or consumer journey at multi-point of contact to be able to bring kids to love racing, kids to buy in the future. So they want to have, of course, racing simulator into dealers to create emotion. They want to bring people the product at home as well, branded people such as Mercedes branded or licensed, so people would have that connection. And as well as, they have content as well. They have telemetry, they have race, they have a lot of video movie that they have around racing. So that's why they want to do. So the impact of Mercedes is to work their consumer journey. The platform we're going to be launching as well as a card manufacturer associated with that. So it's a first product that can be sold at home and through the first trajectory. But as well, bringing those simulator to dealer that are already buying simulators, so you can engage and try your car before getting on the racetrack or the car if you're buying for home. So that's where we should be having that impact at home for home devices, impact in dealership, and as well impact in racing center, and impact on the race on the paddock or for VIP section. Then they can connect to consumer. But it's all about making the human connection for their brand specifically. So that's how the money is going to be generating, and the important from a strategic point of view, which is more important to start.
So your opportunity with that would be, as let's say, putting like a simulator at the various Mercedes dealerships, and then you would sell simulators there, and then as dad's looking to buy a Mercedes, the kid can play in the simulator, or dad can drive his F1 and sort of get all excited about it. And as many dealerships are out there, that could be a point of sale for you guys. Definitely.
Some of our partners in the non-racing have been doing that. The John Deere Caterpillar, that's what they do. It's a tool to train, but it's a tool to sell as well into their dealership. So the same thing is happening for car manufacturer, right? To create that, to help engage and to help sell into the process. So yes, there's already some dealership around the world that has D-Box it's like car simulator into their dealership. But yes, it's a stronger partnership, because when you're working from the brand, it helps at that to move to all the dealership to approach them instead of going one by one. All about scalability.
All right.
Quickly, next slide, Steve again. So G5, it's not a secret code, right? It's just the name of the new generation of actuators. So let's say our actuator, haptic actuator. So I won't go to all the details, but definitely we're happy to launch that product. That product was under the platform that we had at the Grand Prix de France. But practically for the people specifically, it does provide the same quality experience that we had in the past. Yes, couple of innovation that I won't go through the detail. It has got a more modern architecture compared to industrial parts specifically. And as well, it is ease of integration. It has more modularity and ease of connection for people that want to buy simulation with multiple type of actuators. So that's been a trend. We were moving to more industrial type of machinery to more electronic ones. So yes, it's been electronic impact, but this is really important for us. It's a product that we have already put some seed into the market with our core partner. And we're looking to be full throttle, meaning with the supply chain, having more a continuous supply chain arriving toward the end of the year. But really important for us in terms of a phase of moving from a really great experience with old architecture to the same great experiences, but with a more modern architecture for people and for maintenance purposes.
Is it going to be sort of a two-tiered kind of product where like sort of the lesser expensive systems are running the old system and the new one, sort of the iPhone 20 or whatever comes next, or it's sort of the step up, or is it just all the systems are going to graduate up to the G5 system because it's the modern?
It's a good question. So definitely there's going to be for some people. So some people are putting in their new form factor, their new system, the new G5. So there should be a transition for some of our partner. But yes, let's see, simply said, because we're having various type of actuators at various size. But let's say for one core of the market, that should be the actuator that's going to go pretty much everywhere for a specific, like what we call our 1.5 inch actuator. That should be the architecture that's going to be rolling out through that one and the other size of actuator in the future. Full transition over time.
Are you going to be able to sort of the cost to produce will be less, or basically any change in the gross margin, or you can charge more of a premium for it? Anything that'll affect the gross margin?
I'll answer that indirectly. Our job is to make sure that with everything that's happening, we're protecting our margin.
All right.
So quickly, and I don't want to go to the detail for us, it is definitely, so we're happy with the results. Of course, a volatile economy, but our job is to find solution. Our job is to adapt the company. So we were seeing a profitable growth. So we wanted to show as well that it was not just one quarter. So we're continuing that path. Recall as well for the sake of everyone that we mentioned that specifically. We are still as well in that figure investing for the future. So for the midterm and long term. So we do investing in that, but the level we're having right now is sufficient. So that's what is important. So profitable growth while investing into the future. Market is booming. So we said when I joined in specifically, so all those things are to build what we call the Aptic technology platform. So as we were saying, one day would be that how we produce content or we distribute content is able to use D-Box actuator, but in the future, multiple third-party hardware such as vests, gloves, things, etc. And as the market definitely is booming, D-Box, as even if we're looking at that stage, is to continue growing at higher pace than the environment. And last but not the least, for our three core focus, we're in professional simulation. Yes, we're in the theme park business, etc., with our nurturing business. But the theatrical market, the racing market, and the gaming market are the one which are the focus right now of the core of our strategy to grow at rate higher than the industry for the upcoming years. But really happy about the gaming. Impatient, a lot of impatience specifically. So all people internally are looking for that product, but as well the racing and our theatrical business to announce more follow-up. So pleased with the result, but excited about the future because results are about the past. Future is to keep on growing and making more money and improving our business model, moving from a hardware sale company to a more licensing, recurring business model in terms of mix of revenue. This is what we wanted to cover, Martin, today. I know sometimes we can go a lot in detail, but I know there's some question. We are happy that the shareholders sometimes reach to David, Steve and I specifically. We love to be challenged positively, right? We're people that can talk, but positively. And yes, we make decisions. So let's move, Martin, to you if you have question, or to the audience if there's some question we didn't answer that we could cover.
Sure. I'd like to on the financial side, like comparing to last year, the year before was all a little awkward because of COVID. If we compare, let's say, your business now, the Q1 fiscal 2023 to Q1 fiscal 20, which would have been June 2019, how is that business different? Because that was the last Q1 that was pre-COVID. I presume your business was more your EBITDA is adjusted EBITDA is higher now than it was in that quarter. Your system sales were a bit lower, but so just generally, how was the this quarter compared to 3 years ago pre-COVID? How does that business look different?
David, do you want to talk about those trends roughly by market and the recurring, or you want me to pick it up?
Yeah. So I think that on the right of use, the theatrical business is it's a little bit. We got the last quarter. It's a very strong quarter for sure. It's been a record for D-Box, so that was great. So I will say that we have the same a little bit more footprint than we had at the time in terms of seat for the theatrical business. So we're really happy about what happened there. I think we're more diverse than we were at the time. So I think that our racing business, our sim and train business, the attraction business that is back this year, I think it's more equally, the revenue are more equally spread between those markets, and we're much stronger in those markets than we probably were at the time. So I think that it's a good trend for the future.
The theatric business is still clearly your biggest segment. How is the theatric business back to how it was 3 years ago, or is there, like, China, I guess, is still in a bit of a particular odd situation? The I don't know how many globally, how many movie theaters, companies survived and so forth. Just the theatric business with the growth of streaming now. Can you compare how this market is now to 3 years ago?
I'll start it. So first, in terms of comparing apples to apples, so the box occupancy rate is much higher than, just in terms of trend, much higher than we had in the past. So when we're saying that people are going to theater, premium experiences, and if people that follow Cineplex or whatever the company, this is about people, yes, they're streaming at home, but the premium, when people go out, they want to have premium experiences, and premium experiences, such as D-Box, are growing at a much higher pace than what is happening on the theatrical business. So this is foundation number one. So occupancy rate is there. The level of sales of system definitely is not at the level, but for next fiscal year, we'd like to be at the same level we are. So we see more rollouts coming in. We see that the level are, as people, some of these exhibitors have been investing in rebuilding their balance sheet, right? Because specifically, so we're somewhere in the middle. But yes, that we were at the 6-7 million a year of system selling theatrical. Next fiscal year should be the era when we should be in the same dimension and to grow the footprint for the theatrical business.
All right. And you talked about your profitable growth. On a quarterly basis, you guys are lumpy. So are you expecting like consistently profitable quarter to quarter, or there could be some negative quarters coming up just as there is some lumpiness in your business?
Our job is to have positive EBITDA every quarters. Yes, as we mentioned, there's 2 quarters, and for sake of clarity, that traditionally when you're looking at the recurring of revenue, which has an impact definitely on the level of profitability, like our fiscal year, our Q1 fiscal year and Q3 fiscal year, or the calendar 2 fiscal year and 4, so meaning April, May, June, and October, November, and December, are historically, and because of how the movie are positioned throughout the year, the 2 that have the highest recurring revenue. Doesn't mean that they are all low, but definitely that's what we should be aiming. So yes, those business model have an impact around that things as well. But of course, the sales of system of theatrical is the opposite, because you want to install the sales of system when you have, we're not in your busy season, so people install most in the quarter. So that's a balance between the sales of system. All the team business, the professional service business is like, it's difficult to go from a quarter for a quarter. The other thing as well that might have some impact when we're going to be moving forward is in the consumer business. Of course, a lot of launch before Christmas, right? Thanksgiving, etc. So that might be as well. So of course, it's an area we're aiming, but there's another area as well that should be probably some kind of seasonality, as it is for all gaming equipment and things like that.
Martin, I will just add also that, pre-COVID on November 19, we restructured the company at some point, and also with the COVID, we're probably around 100 people right now in the company. We were more than that before. I think that on the cost structure, we really put a lot of effort to maintain this cost structure very low in terms of SG&A to support profitable growth in the future.
All right. Okay. And so should we be looking at you as are you going to be trying to grow your profits aggressively, or kind of sort of keep them modest and sort of excess profits sort of push into driving growth in the business? You're not like an earnings growth story right now. You're a revenue trying to grab market share, land grab, capture as much of the market as on a profitable basis. Is that the basic theme to look at it as?
Good question, Martin. So first, coming back, wanted to make sure when we're saying that at a specific level, the company was sustainable to make a profit. So that was, wasn't a focus on profitability because we're still investing for the future. But that was the work that David was saying. What do we want? What make money? What doesn't make money? If we invest in some midterm, that everything balanced. So that was phase number 1. To your question specifically, Martin, I think I won't be doing a politics, not answering, but I think being a technology that, as you're saying, with a growing market, we need to grow, right? Because you need to grow at least. People would love it, and I would love to be at 300 million specifically, but what is important is that we grow into our core industry higher than the industry is growing. We're winning market share or we're winning something. So I think it's a balance of those. So we need to grow faster than the industry. But secondly, as well, I don't want to be what we were in the past, to grow faster than the industry, but to spend faster than the industry. You understand? So this is the balance as well that we should be saying. If we're growing, doesn't mean that for a quarter it could balance, but we should be seeing that trend. So on a yearly basis or something like that. Okay, they move, I don't know, to 5 million more of revenue, right? Just to say that simply, EBITDA profitability has increased and improved, and there's a scalability of the model. So we don't need to add growing just to add employees, right? Growing to make more money based on so this would be the balance. So this is what we do, and as well based on the company we are, the type of bank account we have right now, and the progeny we're going to be having. And we make some decision as well, which are important. We had a lot of discussion with shareholders, which makes sense. Why don't you sell directly? We make a decision to go B2B2C because we want to tailor with people. Sometimes it takes more time, but we share the risk with our partners. And I would love to send a nice article I had today that I received, a long article with a lot of depth, which is comparing the traditional business model with all those people that are selling directly. And you can be seeing that the gross margin that the people that are going direct, that they were used to doing only direct model, is getting shrinker and even lower than the traditional business model. So yeah, it's fun and it was growing the last couple of years to grow the business, but they have to be viable business, as we saw on a lot of technology slump that happened into the market. So this is where we're growing with a profitable increase.
When you say direct to consumer, would that be like just designing your own gaming chair from scratch and not partnering?
Or selling everything online. Selling a gaming chair, selling online, doing all the marketing, investing on Facebook, investing specifically, acquisition cost of the customer specifically, that would be moving to that route. Gotcha.
All right. And my final question before we get on to the audience here, do you have sufficient cash flow and balance sheet to grow the business how you want to, or are you going to have to raise more equity or find new funding sources, or are you sort of self-propelled at this point?
We're sufficient with the cash we're having right now to maintain the growth. That being said, we're going to have that attraction or that acceleration at some point in time. It's not, yes, we're going to be looking mostly to have strategic money, so wise money. So this is going to be at some point in time, if we see the opportunity, and if we had 3 million, it's going to be really leapfrogging, right? This is where we're going to be looking to have that expense, but at proper market condition.
All right. Let's go to the audience questions here. You talked about price increase. How much price elasticity do you have? Or I guess in more non-economic terms, how sensitive is the market to pricing? If you raised it a bunch, would that sort of hammer your customer sales a bunch?
Well, Martin, I would love to have that crystal ball as in the industry right now. But the only thing I could be saying is I think we were able to make good price increase. Well, as you know, good price increase that were acceptable with our partners. But in various industries, like just price increase, people say yes, yes, yes. But there's some change. So I think right now we have the commercial market. There's more price elasticity, right, compared to the consumer that you want to launch something. But hopefully, what we see specifically is as it's all a guessing game, right? When those inflation is going to go down. So we still see another year of transition. But right now, it's in the commercial professional simulation. That's where we're able to go through this. The more you go to consumer, and it doesn't excel. So that's why we're investing as well on the reduction of cost of those Miller initiatives and things like that, or yes, you invest specifically, but you reduce your cost of production, of cost of execution. So we have to work on both phase into innovation, because at some point in time, people won't go to the movie for $200 a pop, and people won't buy a simulator at $60,000 at home. So that's where we need to find that balance. But if he has a crystal ball, I would love to have the answer.
All right. Has your supply chain issue sort of cleared up? Is the supply chain moving along adequately?
I'm going to be saying we are paid to find solution. Is the market difficult, volatile? Yes. So, and could we have more sales if the supply chain wasn't an issue? The answer is yes. The only thing I could be saying is we still seek for next, at least for a year, still going to be volatile, right? So it's still to manage. So this is a part, of course, that We didn't spend any time on the tools because that's part now of our day-to-day to find solution to do that. But as you're seeing companies, sometimes it does have an impact when you have less visibility in terms of components.
All right. Can you explain the economics of Cooler Master selling a chair? Do you keep full subscription revenue after that?
Yeah, perfect. And it's a good example about when we're saying we want to be B2B2C type of content in terms of go-to-market strategy. So let's take the Cooler Master. So again, razor and the blade. The way we approach partners such as Cooler Master is, okay, we have that chair. I think there's a big market. Yes, there's a big market. Are you interested to work with us to launch that product at minimum 1,000 units? I'm doing that figure, right? But it's when we're talking about scalability partner, it's 1,000, 2,000, 3,000 specifically. So the way we work, we do a partnership that the partnership is about, I'm going to be selling you my haptic hardware, right? You're going to be integrating that price into your seat. We're going to have a co-branded seat, so a Cooler Master and D-Box Inside branding. And they are the one that have a big traction and they know their consumer more than we do in terms of their domestic segment. So they are responsible to sell, to market, and of course we're working with them. But the point is, and we're co-developing the final product together. So that's how we make money. So we make money. We don't give it a different fee, that hardware to them. As you said, on top of that, the consumer, when they'll buy the chair, let's say from Cooler Master, not from D-Box. If someone comes on my side, I'm resending the sale to Cooler Master as my partner. People would have to activate their seat, meaning pay a subscription mode. So some might be that we're going to be charging an amount per month or per year, like a Netflix, or either in a high-end product, we could be bundling an amount when you buy your chair at that price and you have 3 years of haptic code integrated, but that part is going 100% to D-Box.
All right. Who is your biggest competitor?
That's the question, which is, I'll answer quickly because we have variable multiple, but I'll go quickly. In the theatrical business, we have two competitors. Well, the CapEx war, meaning we compete about buying a new screen, changing the scene, popcorn machine specifically. So I'm getting that simple. So we have that thing about the more you can be strategic with an exhibitor to show them that we can be bringing new consumer and that they will buy more. That's the most important competition that we're having into that field. And that's what is interesting in the result we're having is D-Box is providing new source of revenue because we're adding a premium. So more revenue per patron, new people, and the people that cater to D-Box are people that we know by market study that they're buying more popcorn, things like that, specifically in Tic-Tac City. So this is competition. Second one, we're having people that have been following us, 40X, which is a Korean company, but there's a different type of haptic with water and air specifically. And there's an operator as well. So that's been one if people would want to have that specifically. Different business model, different persona. We don't cater specifically, but that would be the only one that we could be saying that is really of significance for us. I won't go into the commercial and the professional simulation because I'd take too much time. In the racing specifically, there's other people that are mostly that there's other type of people that's built new type of actuators. D-Box is still the de facto leaders. We're a little bit pricier than the other one. So people that want to have full experience, they're saying you have the best, like the iPhone, right? You're the best experience. Don't want to have a fight on Samsung and Apple, but you're the best one, the best experiences, specifically a little pricier. But as well, we're having other component that the other doesn't have, which is being able to, when we're aiming to bring movies, series, and all that connection with the original content. But yes, there are a couple of integrator that has been putting hardware solution around the streets. And in the consumer, the competition that for me see partnerships is nobody's really, well, there's been a lot of trial of smaller company bringing a shoe, a vest, something like that funded by VC. Right now, some that was interesting, they came from the consumer world with small price devices, but they were not able to create a footprint and the haptic experiences was limited. For us, we want to convert those technically competitor to partners as we can drive our codes, their hardware, and provide a better experiences and to leapfrog together about having smaller cost design into the market while having all the software and licensing capacity of the box into the library and experiences. That's where we're aiming. But right now, there's no leadership except DBO and that into the consumer market. But a lot of people are looking into that. But if we're talking about street competition, that's where I would be. Excuse me, Martin, it's already long. Simplifying the competition aspect of the core markets.
All right, so you have a lot of competitors, but there's no D-box like I don't know. Yeah. Okay.
I'll say something. The previous CEO, Claude, started D-box in the early 2000. There was no competition, but you had to create a market. It was more expensive. I prefer to have a market, big market growing. We have a nice foundation and still have to fight. I prefer that context of being alone in the desert.
Yeah. All right. What is happening with the home chair, the non-gaming home chair? And are there any success with partnering with Netflix or any other streaming services?
Well, first, we have in the adaptation we made, as we were saying, is on home. Let's put that at the end of the spectrum. On the gaming chair, we're focusing on gamers, and we're going to be converting the gaming set to entertainment by providing movies and series. And this is on the home chair. It starts that right now it's a furniture, right? So right now what we're doing is which people focus on movies, series, etc. As an example, I don't think someone would buy a recliner to do PC gaming, right? It doesn't fit together into the room. So right now we spent some time. Definitely, we're going to be focusing on home theaters. We're going to be focusing as well on the designer, the architects. So right now we want to focus on that one because our priority is launching the gaming chair. Decision we're making, Martin, something like that is yes, we do have those to market. We're going where we can make some sell and some addition and making great margins because both products are not at the mass, people would like at mass market level. Do we have discussion with Disney? The answer is yes. We have discussion with Netflix? The answer is yes. But you need to sort of provide the experiences. After that, we'll move to a lower end product when they'll be ready to put their end as well in their pocket to launch those ones. So because if you go to Netflix and you say, I'm going to be selling 10,000, well, they don't care 10,000, right? It doesn't make the needle. If you say Netflix, I could differentiate your experience. You want to build something with us. We're going to be able to compete with Disney Plus. Instead of buying billions of dollars other content, provide a better experience, we're going to be able to charge. That's where the dimension is right now. A year ago, they were discussing with us, but they said it was the war against new users, right? Now we also churn rate, things going down. Now they're starting to see how do I compete in the future because I'm not growing anymore to a certain extent. And I'm spending so much money onto content that I cannot spend more because people have that many times. So this is where we're aiming with them. So discussing project marketing, going through this, but the mainstream that people would love to have and I would love to have, it's not happening in the next 3 months.
All right. And my add-on to the whole metaverse thing that all the tech giants have gone, are you having significant discussions I know the VR headsets or some sort of accompaniment to the real VR world?
Yeah, good point. So I'm going to be putting that. We're focusing right now about where we can make money. Of course, we're having strategic discussions. So the interest of the metaverse as a whole, right? It creates a destination about what could be the future, right? Feeling a lot of experiences, and even Mark Zuckerberg mentioned haptic needs to be part of that. This is the destination. People know that the full thing around that will be taking years to arrive as many technology. How we're playing the metaverse? Are we having discussion from a strategic level and trying to go with them? The answer is yes. But practically, I see that the next step about how to make money with that is to work on small metaverse and twofold. One of the reasons why I want to tackle or to connect to multiple third-party devices is the experience of the future in the metaverse is going to be either through your body, through your hand, through your ass, meaning being on a chair, being on a vest, being with gloves specifically, because that's where you're going to have the feeling. So if we connect to multiple devices, working with AR, VR, and all things, we are putting solution out there so people can build experiences while making money. Secondly, when I'm talking about small metaverse, a game is a small metaverse to a certain extent, right? People into a virtual world. So that's why I feel that the next thing is to be in some of those projects so people can know what experience into the future in the metaverse is going to be the first one to make money out of them. So that's how I would be saying we're going to be playing that. We did the same thing when VR was out in 2015 and 16, moving to focusing only on commercial. And that's why the LAI game in Rapid Ride, we made money out of VR as people spend, hundreds of millions. But I see the metaverse as the same thing. Great destination, great curriculum to have everyone align on something. But nobody right now is saying, how do you pay except speculation? So that's why D-Box has to be wise not to put all of those back there. But we do believe in around that trend and playing that with what I just mentioned.
All right. Any success onboarding AMC within the theater business?
Well, first, if you're looking, so yes, those key exhibitors are important. If you look for AMC specifically, so we're with OITS, AMC family. We are with Cineza, Spain family. And I'm going to go to UK this week. But the point is, we are working all those big exhibitors that are around the world with multiple locations, and they look to each other. And that's why we have been starting specifically. So are we growing into the AMC family? The answer is yes. Is AMC on the radar? The answer is yes. And that's why around AMC, there's Odeon, there's Cineza, there's OI specifically. So we work with various partners. And of course, we're having great results and expanding. So that gives more trajectory to go at the big guns. But a year, 2 years ago, AMC was the one with the worst balance sheet into the US because of the way it's been structured specifically with Wanda. So even with that, they had limited capex. So sometimes you need to target with someone, but you need to decide someone to be in their head, but to know where they're going to be ready to deploy based on their priority. But yes, it's on the list.
All right. The wording here, it seems like the partnership with JMAR has not really been that successful. Are you trying to sign up any lower cost manufacturers? And you've kind of addressed that earlier. It's not your core focus right now, I guess. It's the gaming chair, and you've got limited resources. So that's not your focus?
We're having one person, and it's true that the announcement we made with JMR, when you work with partners, you have yourself, and the partner is one has responsibility, right? So it's true that the partnership with JMR and responsibility that people had didn't succeed as planned. So definitely there's a new dimension coming around that. But yes, we're having also first we're now discussing with of course we have a real look at the partnership. We put the strategy about what we wanted to have. There's been some change, so there should be some impact around JMR. We're going to be at CDI in September as well, discussing with other partner as well. And we did D-Box did have a network that was let alone based on priority for a couple of years. So we're reconnecting with all those with new product we're having down there. As an example, we have the recliner, but there's been some chair we launched specifically that is getting some attraction so people can expand. So we're, again, profitable growth, reconnecting with our network, and yes, couple of seating partners, specifically knowing that the first phase is furniture business, but after that, we're going to be connecting to more electronic type of seats somewhere between the gaming seat and the recliner. But now, with the research we're having, that's the focus we're having, where there's some money to be made and some decent margin at the price we are.
All right. We've got one question just popped in here. Congrats on your last quarter. It was great. Does this change your guidance for next quarter and year?
I'm trying to understand the question as we're not providing any guidance.
I didn't think you were, but I thought I'd lob it out at you.
But I'll use, but no matter what, I'll use the trend. So definitely this year, let's say current fiscal year 2023, which ends March 31st, 2023, right? So again, compared to last year, definitely you should expect great. Our target is sales growth and EBITDA growth, right? We did mention specifically that if you look, you can trend right now. If you look at the 2 quarters, we're trending into if you just like annualize that in the 28-ish to 38 millions, we want to trend, let's say, in a good direction and improve the EBITDA level. We did say that the company at 30 million sales could be making 3 to 4 million EBITDA, but we're investing a part of that for our home initiative, which are now definitely the one that we're spending more than what they contribute. So they have the perspective is always that they contribute. We do believe and we're excited about that market. but that's where we do. So this should be the trend about getting to pre-level cutting to continue that direction, with revenue coming from consumer more in the second part of the year. Yes, with delays on the previous forecast for various reasons.
All right. And I know what the answer is to the next question, but maybe give some context.
Shoot.
Are you satisfied with the stock price right now?
Nope, not at all.
All right. And I guess, can you be maybe specific? You're obviously reaching out more with investors. Any other things you're going to be doing to kind of raise awareness and bring support to that?
Well, as you know, that's one of the reasons in the last 2 years when we did, even if not perfect, doing more engagement, endorsing, we're doing webinar. We did some as well with the US specifically. So we know there's a market that we don't control. So the first phase is discuss with a lot of IR firm about what should be the strategy. So yes, it's a bit more love, tender, and care around that. Definitely. We were saying as well, of course, as a public company, you need to provide consistent results, right? So people come back. It's not something of a 1 quarter, 2 quarter process. So let's say we're executing. Are we happy around the stock? Not at all. The only issue is we didn't decline by 70% like the tech industry. But the part right now is we are working with IR specifically to drive execution, which hopefully will lead to an impact, but not happy at all. And even when you saw the quarter, no response to positive quarter. And even people were saying when we had great quarters, hey, you know what? Nobody was expecting that. So this is on our radar, short-term radar.
All right. That is the end of the questions. We're an hour into this. So I think it's about time to wrap it up. Any sort of final comments before we close things up here?
Well, thanks, everyone. Thanks, everyone, for following Debug, being as engaged and discussing with us. So it's always a pleasure. Let's push out specifically. And for us, we're paid to take the best decision we can between the market, between the trajectory, between the financial specifically. So generally happy with the result right now and looking forward to try to continue growing that and making money and hopefully have that stuff kicking in.
All right, gentlemen, thank you very much for taking the time to chat with us and reaching out to the market. We really appreciate it. Have a great day, and we'll talk again, hopefully soon. Cheers.